Welcome back, accounting boffins. Right? We're busy with asset disposal, fixed assets, calculations for depreciation, working on the old, the sold, the new, and everything that goes into a question with regards to fixed assets. Okay, quick recap. I think it's important that we know that when we're dealing with an asset disposal account, you bring in all the components, the depreciation for the current year, the cost price, the accumulated depreciation. Obviously, the carrying value is not used, but it's used for note number 3, and then the selling price. What's the purpose of the asset disposal account? Once again, to determine whether we have made a profit or a loss on sale of asset. Once that is done, the account then closes off. I often use the term, it self-destructs because it closes off. The debit side equals to the credit side and the account ceases to exist. So it's an interim nominal account. Okay, remember we're now calculating the depreciation for the year. We start off by working with the first one we're going to be working with is the vehicles, right? Okay, step number 1, look at your vehicles. At the balance you had an amount of 507,000. However, we know that from the 507,000, we sold the one vehicle to the value of 120,000. That gave me a remaining balance of 387,000. Let's do that. Here we go. There you see 387 is this will be your remaining vehicles or the unsold component of your vehicles. Right, let's do that. So it's your 387,000 times the 20% because we're working it out on cost, and that will give you a value of 77,400. So there we go. We've got the 77,400 for the vehicle that were unsold or your remaining vehicles. Okay, now if you look at the sold vehicle, remember on the sold vehicle, we've already calculated our depreciation in our previous segment. Let's just get that figure so we know what it is. There we go. It was the 20,000 Rand. So in this calculation here, remember the sold vehicle had a total depreciation of 20,000 Rand. Right. Did we buy a new vehicle? Let's check. They told you that the cost of the trade-in, we sorted out the trade-in, the 13.5, and the cost of the new vehicle bought was 261,000 Rand. Now, immediately I know this is now the new vehicle, right? And if I look at the new vehicle, step number 1, once again, I'm going to use art, amount, rate, and time. Time. That T is very important in your calculation. Okay, so the cost price of the vehicle was 261,000. That's your A. Your rate is 20%. That's your R. And your T. Now, when did we trade in this vehicle? Remember, it was traded in towards the end of the year. So for how many months did we use this vehicle? We only used it for 2 months. You recall the old one was used for 10 months. Clearly, you use this one for 2 months. So let's do this calculation. And it will be my 261,000 times the 20% times 2 divided by 12. And that will give me a figure of 8,700. Okay, so that's my depreciation on my new vehicle. So in other words, on this, let's work out now. We can say sold, old, and new. Can't we? Sold we know was 20,000. Old, let's get the figure for old. We worked it out. Old was the 77,400, and my new we calculate as 8,700. There's my new. So in other words, you now add all these components. What do you add? 8,700 plus 77,400 plus your 20,000, and this will then give you your total depreciation here of 106,100. So this 106,100 is the total depreciation on your vehicles. Once again, guys, three components: sold, old, and new. You want an easy way to remember that? Come, I give it to you. Sun. Do you see it? Sun. What do we mean by sun? Sold, old, and new. In this way, you'll know whenever you're doing your calculation, look for the sun. Sun, sold, old, and new. Okay. Now we go on to the vehicle. We've done the vehicles. Let's do the equipment. We've done this one here. This one is done and dusted. Let's go to the equipment. New equipment costing 40,000 Rand was bought on the 30th of November. This has been properly recorded, right? And they're telling you that equipment is depreciated at 10% per annum on the diminishing balance method. So, step number one, look at your equipment and you see you've got a figure of 448,000. Now, be careful. The 448,000 includes the new equipment. How do we know that? Because we are told that this has been properly recorded. It's part of that figure. And you have to see that in order to do your calculations, remember we said we separate our calculations. So therefore, you take your 448,000 and obviously let's work with the new first. So the new equipment is 40,000 Rand times your rate, which is 10%. So the amount, the R and the time, when did we buy this equipment? Obviously they must have given you a figure. This equipment was bought on the 30th of November. So it's obviously the 3 months you're working for will be December, January, and February. So therefore, in your calculation now, you say 40,000 is your new equipment. Now, a question just arises here. Why am I not subtracting its accumulated? Because it's a diminishing balance method. Very simple. Because it's new, it does not have any accumulated depreciation. So obviously, it's the 40,000 minus 0. Got that? So 40,000 times your 10% times 3 divided by 12. Let's do that calculation here. Here we go. It's 40,000 times 10%, okay, is equal to that, times 3 divided by 12, and this will give you a figure of 1,000 Rand. So there's your 1,000 Rand. It's your depreciation on your new. Right. So in vehicles, you had one component which was your new. You also had old equipment, right? So here we go. Let's find the old equipment. Step number one. Watch what I do. You take the 458,000, which is given to you, minus the 40,000, because that's the new one on which we've already calculated our depreciation. And why am I subtracting it? Because it has been recorded and it is part of the 458. So I take it out of there. This gives me, obviously, 458 minus the 40. Now, why am I subtracting the 258,000? Because my method of depreciation is diminishing balance method, right? And diminishing balance method, I know, is cost price minus my accumulated depreciation. So therefore, it's the 458 minus the 40. This is the new vehicle that you are removing. Remember that. Okay, so let's do that calculation. Here we go. 458,000 minus the new one of 40,000. That leaves us now with only the old equipment, which is 418,000 minus the 258,000, which is my accumulated depreciation, and it gives me a figure of, let me just redo that calculation, 458, right, minus the 40,000 will give me 418,000 minus 258,123, and that gives me a figure of 160,000. I think we've got an error here, so not a problem. Let's just fix this error up while we're working on it. We actually have to get a figure of, I think there should be 268,000. Let's do that and see what happens. If we take 458,000 minus the 40,000 will give me 418 minus 268,000, and that will give me a figure of 150,000. Obviously, you can see that this figure here will probably have to change to 268,000. So now, if you do this calculation, you get a figure of 15,000 Rand for your depreciation on your old equipment. So now you've got your two components. Your total depreciation would be the 15,000 on the old and the 1,000 Rand on the new, to give you a total depreciation of 16,000 Rand. Okay. We're now looking at our tangible asset in terms of land and buildings. Right. We start off with our carrying value at the beginning of the year, which was 843,000. Okay, now let's look at the information that we have. We are told that our land and buildings is 880,000 Rand at the end of the year. Okay, but remember, if you're looking at the 880,000 at the end of the year, you know that we had purchased, that there was an additional storeroom that was built, and they had included a charge there which was not supposed to be there. Let me take you back to that one there so you can see exactly what we're talking about. We need to find that one there where it was in, I think, in the start of the question, if I remember correctly. Yes, dear. We paid them 37,000 Rand for repairs and a new storeroom of 26,000 Rand. That means, therefore, that in this calculation year of ours, when it comes to the land and buildings, we have to make sure that we only bring in the 26,000 Rand. Clearly you can see. So if you took the 880 minus the 11,000 would give you 869, and 869,000, let's do this here, 869,000 minus the, what figure are we looking at? 26,000. 26,000 will give you the 843,000. So there we go. There's my opening balance of land and buildings, right? There's my disposal, it's not a disposal, it's supposed to be part of my additions, right? Because we did not sell the land and buildings, so this figure is misplaced here. It actually should fit into additions of 26,000 Rand, and there you got your closing balance. 843 plus 26 will give you 869. Okay, next one. This was the asset that we disposed of, that was your vehicles. So once again, looking at your disposal of vehicles, remember, you start off with your opening balance of 507,000, subtract your accumulated depreciation of 273,000, will give you your carrying value at the beginning of 234,000. What do we know about vehicles? There was an addition. We bought a new vehicle for 261,000. We've dealt with that. Remember what we said, and this is very, very, very important here, guys. If we look at this one here, I want to bring this to your attention once again. Here we go. Can you see? Carrying value of 16,000 Rand. Remember we said a big 3? So therefore we're showing you now in note number 3 where you say disposals at carrying value. Obviously you bring in your depreciation, which we've calculated already, and then obviously you now take your closing balance of your vehicles minus your closing balance of accumulated depreciation, and that will give you your carrying value at the end of the year. Okay, the next one that we look at is our tangible assets. Here again, you start off with your carrying value at the beginning of the year, 150,000. Your opening balance was 48. So 48, bring in your additions. You know you bought for 40,000 Rand, the new equipment, right? Your disposals, there was no disposal of equipment, but there was depreciation of 16,000 Rand. And obviously, you now work out your closing balance at the end of the year minus your accumulated depreciation, and that will give you your carrying value at the end of the year. Okay, so what have you seen? You've seen how we've done the calculations for depreciation. Remember, son, sold, old, and new. Then show all your calculations and bring in that information in note number 3. Please check in note number 3 whether the balance that you are given is your opening balance or your closing balance. Sometimes you are given the closing balance and you have to work backwards, right? Keep that in mind. At other times, you are given the opening balance and you have to actually work downwards. That means that way. So depending on how and what information is provided to you, you will then decide which way to do your calculations. You must be able to work both ways, from top to bottom and from bottom up. Okay, guys, when you come back, we'll do another question on asset disposal to ensure that you fully understand the section. And yes, I'm getting the feeling that you're beginning to enjoy the calculations, and that shows that once you enjoy doing something, you're going to ace it in the exams. See you just now.